In a move that has surprised many, China has announced a massive $12 billion investment in development of Afghanistan. This unprecedented level of financial commitment marks a significant development in China's involvement in the region and has the potential to shape the economic and political landscape of Afghanistan for years to come. Afghanistan is a landlocked country located in South Asia, bordered by Pakistan to the east and south, Iran to the west, Turkmenistan, Uzbekistan, and Tajikistan to the north. The country has a rich cultural history with evidence of human habitation dating back to the Paleolithic era. After the U.S. soldiers withdrew in August 2021 and the Taliban took over, Afghanistan's economy took a hit. That's why the administration is trying to stabilize the country by attracting investments that can provide employment opportunities for Afghans who are struggling. And one way to do that is by developing mines and hydrocarbon resources where energy can play a crucial role. So, the Taliban recently signed their first international deal since taking power in August 2021. It's a contract for the exploration of oil reserves in northern Afghanistan with a Chinese business called Xinjiang Central Asia Petroleum and Gas Co., or CAPEC in short. Under the agreement, CAPEC will contribute $150 million annually to Afghanistan, which will increase to $540 million in 3 years as part of a 25-year contract. The project is mainly focused on a 4,500 square kilometer region that spans 3 northern Afghan provinces: Saripol, Jozjan, and Faryab. These areas are particularly important because they border Turkmenistan. In fact, this project can have significant political and economic prospects, not just for Afghanistan, but also for the region. And that's where China comes in. They can play an essential role in this, and that's why they decided to invest in Afghanistan's infrastructure. Actually, it's not the first time they've made such a move. In fact, the state-owned China National Petroleum Corporation (CNPC) and the previous Afghan administration signed an agreement back in December 2011. At the time, the Amu Darya Basin was believed to have around 87 million barrels of crude oil. The mining minister of that time, Wahidullah Sharani, had said that they would begin real work in October 2012. He even mentioned negotiating with an undisclosed northern neighbor and expressed hopes that Afghanistan would be producing around 25,000 barrels per day by the end of 2013. In March 2013, he had announced that the wells are ready for production. However, things didn't go as planned. Despite Kabul's talks with Uzbekistan on transit issues, construction was apparently suspended, and Chinese employees left the country by August 2013. That's why the recent development holds a great deal of significance. With this new investment, China is once again showing its commitment to developing Afghanistan's infrastructure and resources. Let's discuss what it does actually mean for the people of Afghanistan in detail. Well, it turns out that the Taliban's leadership is pretty optimistic about this new deal, especially when it comes to the economic benefits it could bring. At a recent ceremony in Kabul to sign the contract for the new oil and gas field, Mullah Abdul Ghani Baradar, the Taliban's deputy prime minister for economic affairs, spoke about how this investment could help create a viable economy for Afghanistan. He sees this project as a way to open up new opportunities for cooperation between China and Afghanistan, which could lead to even more benefits down the line. But what about the people who actually live in Afghanistan? Well, according to Shahalabuddin Dilawar, the Taliban's Minister for Minerals and Petroleum, this project could create 3,000 new jobs for Afghans. That's a pretty big deal in a country where unemployment has been a major issue for a long time. And not only that, but Dilawar also claims that the Afghan side will initially own 20% of the project, which means that the benefits will be shared with the local people. Of course, it's not just about the short-term gains. Dilawar also has bigger plans for the future of Afghanistan's economy. He believes that within 2 to 3 years, the country could see a real boost in its economic prospects, which could even attract people from other countries to come work there. And as for the oil itself, he says that it will be refined in Afghanistan, which could also create more jobs and economic activity. This investment will only strengthen the partnership between the two nations. With confirmed natural gas reserves of 1.75 trillion cubic feet and oil, in addition to valuable mineral resources, including rare earth minerals used in electric vehicles, Afghanistan is a treasure trove of potential wealth. This investment by China is not only an opportunity for economic growth and stability, but also for promoting sustainable development in the region. Furthermore, this investment by China reflects the improving political and economic situation in Afghanistan, which will undoubtedly attract new foreign investments in related fields. China has agreed to follow its long-standing policy of non-interference and respect Afghanistan's internal politics, which has been welcomed by the Afghan government and people. This investment also offers the United States a significant alternative and different option in the region. Other investors can learn from China's investment and gain insights into the opportunities available in Afghanistan. Thanks to improved safety and security measures, the development of mining and oil ventures in Afghanistan has become more attractive to investors than it has been in years. By investing in these projects, China and Afghanistan can establish a model for collaboration on large-scale energy and other industry initiatives. Let's see what China is gaining through this collaboration. The investment of $12 billion in new Afghanistan infrastructures has strategic benefits for China. Dealing with the Taliban is an extension of a strategic conundrum China is experiencing with its energy security. China is the most populated country in the world, a powerhouse industrially, and it also consumes the most energy globally. However, the nation's domestic resources are insufficient to meet the demands of its rapidly expanding domestic market. This has made China a significant net importer of oil and gas, which has been a driving force behind several of its recent alliances, including those with Russia, Ecuador, and the Gulf states of the Middle East. Although China has maintained excellent relations with these nations, Beijing's energy imports have a strategic weakness, since with the exception of those from Russia, they must be transported by sea and via politically sensitive areas that the US is militarizing, such as the South China Sea. This is where the Belt and Road Initiative (BRI) and other projects come into play, as they are designed to create China's own sphere of influence. And no strategic blueprint of China, including the BRI, would be complete without including Afghanistan. The Middle East, Central Asia, and Southern Asia are all connected via a little section of border that the Central Asian nation shares with China. This indicates that Kabul is essential to China's own security and strategy, as well as for the expansion of economic activities. Despite the fact that Afghanistan has always been intrinsically unpredictable and hence unsuitable in terms of the political landscape, the end of the US-led war against it and the Taliban takeover has provided China the ground to accelerate its sphere of influence in the region. Also, the war in Afghanistan has disrupted China's energy supply chain. The investment is expected to help stabilize it. Additionally, the investment will create opportunities for Chinese companies to bid for projects and gain a foothold in the country's economy. The Afghanistan project is also expected to generate employment for the Afghan people and boost the country's economic growth. Well, China's ambitious investment in Afghanistan's infrastructure is not without its challenges. First and foremost, the country will have to contend with strategic and diplomatic maneuvers from the United States and other regional players, who may seek to undermine Chinese influence in the region. In addition to geopolitical obstacles, China will also face logistical hurdles. Afghanistan is known for its rugged terrain and difficult geography, making it a formidable task for China to transport resources and equipment to their intended destinations. Local politics may also pose a significant challenge to China's efforts. Warlords and other armed groups are deeply entrenched in many areas of Afghanistan, and their presence could complicate China's efforts to build infrastructure and establish a foothold in the country. Despite these challenges, China's investment in Afghanistan represents a new wave of economic competition in the region. The Taliban regime, which has historically relied on the drug trade for revenue, may view China's investment as an opportunity to diversify its economic base and strengthen its grip on power. If you found this information about the $12 billion investment in development of Afghanistan informative and engaging, then you might be interested in receiving more content like this in the future. To stay up to date with the latest news and insights, consider subscribing to our channel and hitting that like button. Hit the bell icon and be the first to know about future updates and informative pieces. And by liking our content, you'll help us reach a wider audience, allowing us to continue bringing you quality content. Thanks for watching.